All right, it's the penultimate trading day of the week, Thursday. Welcome. This is Market Pulse on News Central in partnership with Naira, of course, keeping a track on the markets, capital, currencies, and fixed income. I am Joanna Mustafa.
And I'm Frank Fagbo. Let's begin with some of the top stories from the global markets. If you look at what has been happening, you see that September's consumer price index rose faster than economists forecasted last month. And this is happening for the first time since March, posing a potential obstacle to the fight to return to 2% inflation. The headline consumer price index inflation was 2.4%, increasing by 0.2% in just September. In reaction, the stock futures fell as traders weighed in, and they are seeing that their data is showing hotter than expected inflation and a slowdown in the labor market. Equities dropped in early New York trading, with the S&P 500 contract down by 0.3%. The yield on was, you've seen that the yield, there was a little change in the yield at 4.07%, and it's literally wavered. Swap traders boosted to well over 80%. The probability that the Federal Reserve will opt in for a 25 basis point reduction in November. This latest reading on consumer price and consumer inflation is expected to inform the Federal Reserve debates on its path to next interest rate decision. And data released on Friday showed that the labor market added 254,000 payrolls in September. The strong report has changed expectations about the path forward for interest rates, with markets a smaller 25 basis points in November rather than another jumbo 50 basis point cut. Evidently, we're seeing that the ride to a 2% CPI target continues to bumper. And anyone who thought that the Federal Reserve, or perhaps the Fed, was going to lower rates by another 50 basis points in November is dead wrong. And we're literally seeing what is happening as regards the markets.
Yes, definitely. Expectations are changing, and currency markets is also reacting to a higher than expected rise in U.S. inflation for September. The U.S. dollar edged lower against the yen today. The greenback was, of course, down 0.54% at $148.50 to the yen, after rising to as high as 149.58 yen for the first time since August 2nd. The dollar index, which of course measures the currency against the 6 key rivals, including the yen and the euro, was down 0.09% to 102.780 after hitting its highest since August 16. And that's your global market highlights. When we return, we'll look to local equities markets here in Nigeria. All right, 4 trading days down, and of course 3 of those 4 days in the red. Today, Thursday, the markets are down once again, marginally though. So, I mean, the bulls did put up a fight. The market is down 1 basis point, 0.01%. We're seeing the all-share index now at 97,477.19. And we also see market capitalization at 56 trillion naira thereabouts. So about 7,091 deals. That is what we experienced on the markets today on the NGX. If you come to some of the top gainers up there, we have Regency Alliance Insurance that was up and gained 10%. They have been consistent gainers this week, so you wouldn't be surprised if by the end of the week you put it all together and they are the top gainers for the week. Capitan as well is a top gainer today, gaining 9.73%. That's what we're witnessing. And we know that Capitan Support Group PLC topped the list of some of the best performing stocks on the Nigerian exchange in September. It appreciated about 72%, but also the upsurge was driven by investor sentiments and healthy earning expectations in Q3 after the company announced errors that it found in its half-year unaudited financials. So, you know, that again, but we'll see whether or not the Q3 results meet up with expectations and continue. Obviously, this is a bullish run with Capitan gaining today 9.73%. That's what we're recording. Royal Exchange is also up, ABC Transport amongst others. If you come to the top losers list, Dar Communications tops that list as a top loser, down 10%. Livestock as well is also, you know, down. Sunu Assurance amongst others. Consolidated Hallmark as well is a top loser, a decliner for the day amongst the top losers. Moving now to, you know, when it comes to trade volume, We are seeing, trade volume strengthen a little bit. Fidelity, the banking stocks seem to have it when it comes to trade volume today on the exchange. Fidelity, UBA, Zenith and Access, and Lasaco is somewhere there in between as some of the top traded stocks on the exchange today. Coming to the currencies markets, let's take a quick break, and when we return, of course, we'll take a focus on the currencies markets. Still tuned in to Market Pulse, and of course we're coming to Pulse of the Day, but not without getting what's happening on the currency markets. Traders, of course, believe demand for, those paying school fees abroad and importers, right, stocking up for the festive season could raise dollar demand and cause the Naira to lose ground. And of course, we're already seeing that happening. The Naira was quoted at 1,648 Naira to the dollar on the official market today. The currency, of course, changed hands at 1,690 Naira to the dollar on the parallel market. That's for the Naira. Now coming to the South African Rand, that also edged higher against the dollar today ahead of local mining and manufacturing data, and of course the US inflation report that did come out today, definitely going to have an effect on the market. The Ghanaian cedis this week weakened slightly against the dollar, right? And of course, this is driven by reduced supply of dollars despite the central bank's 7-day funded forward support of approximately $54 million. So it's expected to weaken further due to corporate foreign currency demand, mainly from the manufacturing and energy sector. So that's pretty much it with currencies, in relation to the dollar across the continent, right? Right now, we are sliding swiftly into Pulse of the Day. We have Daniel Effah, Senior Business Development Manager at PU Prime Africa, joining us for Pulse of the Day. Daniel. All right, joining us to discuss activities across the markets on Pulse of the Day is Daniel Effah, Senior Business Development Manager at PU Prime Africa. It's great to have you in, Daniel.
Good afternoon. Thanks for having me, and it's nice to be here again.
All right, always a pleasure. Of course, globally, U.S. inflation data is in focus. And, after rate cuts, a lot of emerging markets already assessing the work. Previously with the rate cuts, a lot of emerging markets were assessing the welcomed impact, it would have on emerging markets. But with the latest CPI data, what direction do you see rates heading? And what impacts? Has anything changed for emerging markets, especially currencies and capital markets?
Okay, so what came out, I think you said it earlier about the 2.4 year-over-year figure that came out from the U.S. Inflation reports. And so what we are saying is the effect of the 50 basis points that happened in the last U.S. Fed meeting. And it just shows, because what analysts have been expecting is for us to see what happens with the inflation data in terms of, is inflation being tamed enough for the easing to continue. So 2.4 is fantastic in terms of what we are expecting. The target for the US is still 2%, right? So that's why you see the market, we are seeing a stronger dollar right now because of that. And what this means for emerging markets is that the US would continue. Going to November, will most likely do maybe a 25 basis point rate reduction. So that means that we should be expecting more of portfolio investment coming to the emerging market, because, of course, emerging market, we are still seeing a lot of rate increase. You get Nigeria, for example, there's a potential 50 basis point again before the end of the year. So we're going to see more of capital flows. You're going to see more of such coming in. And it just shows that, it just shows where the distinct nature of the two economies right now, the global north and what the global south is doing right now. But I think that is what we should be expecting. We should be expecting that. Yeah, go ahead.
I mean, it's be interesting to see how that, pans out. But, there are those who are also saying that the Fed's rushed when it comes to cutting interest rates. And, those, some are even commending the CBN for not jumping on the bandwagon when it comes to holding or cutting rates. They were a lot more cautious. Do you agree with this, this stance?
I think that it depends. It's a peculiar conversation. The Fed didn't rush because of course, some people have the opinion that the Fed's rushed, but I don't think that is the case. I think it's a function of they have a declining jobs data for the past 2 years since they've been consistently increasing rates. At this point in time, yes, you focus on people. Let's try and expand the economy right now. Let's try and create jobs. So wouldn't see it as a rush. In fact, based on what they are saying, based on the projection for the next 2 years, we are seeing there's a potential slowdown even in the interest rate decrease. Right, for the CBN, CBN not joining the bandwagon is a function of our own peculiar problem, right? I still feel CBN is joining the bandwagon because of the consistent interest rate increase, because at the end of the day, you want to see if it has a direct effect on taming inflation. But that's another conversation for another day. But the CBN is doing its part again in terms of using the tools at its disposal to fight the inflationary pressures that we are seeing, and also in terms of currency stability, which is what this will be doing. Because at the end of the day, you're seeing as long as the US rate keeps going down, we are seeing a weaker dollar, which would mean that we are more competitive in terms of exports, and all other conversations get to economy. So either CBN should keep taking the conservative stance it is taking, right? And we keep waiting for the impact on the economy as a whole.
All right, Daniel. Well, we've been seeing persistent decline this week, and it's said that the fixed income securities market is taking the attention of the equities market. Are you of the same school of thought?
I think that last time I was on the show, I think that was the first day of the month. I think that was my assertion also, because I felt that going into the last quarter of the year, we just have in our own space, it's just about 2 months: October, November, December. Everybody's taking profit and waiting for what happens in the new year. So you would want to have to rest. You want to take a safe stance in terms of managing your risk, and that is why you are seeing a lot of attention. I've seen a lot of attention going towards fixed income security. So that's basically what is happening, and it is not surprising. It's basically market behavior.
All right, Daniel. Let's also see from your cup of thought what's happening in the space, especially with the yields of Nigerian T-bills. You're seeing it declining to 22.87%. What's your take about that as well?
Yeah. So this is the thing. I think that we should I say we are lucky, or should I say it's just where we are as an economy. Our treasury bills are oversubscribed.
All right, we seem to have lost, him there. But I mean, it's interesting to see what's happening in that space, right? And
said our T-bills is oversubscribed.
Yeah, indeed. And obviously the attention being on the fixed income markets. From what he's saying, they're going to be, obviously investors are going to be taking positions towards the end of the year, and he's saying that they'll be taking profits, right? And that will definitely bring a decline in the market.
In the equities market. We're seeing what is happening with our fixed income securities. Investors will definitely flock towards that particular, those asset classes, because see what is happening. It's riskless, quote and unquote. And would you rather bear the risks of what happens in the equities market or tilt towards the fixed income?
Well, I mean, we'll see how this all pans out, because there's also the school of thought, the analysts who are saying that, this Q4, we are going to see recovery, right, on the fixed income side of things from the losses in Q3. But again, that is a metric. So those are the metrics we track here on Market Pulse. Hopefully we can get Daniel Effah back on. Otherwise, we're going to take a break and come back for key metrics with Frank.
This is Key Metrics, and let's talk about what is happening. We have some listicles, Nigeria's capital importation, and beyond Nigeria's capital importation, that's what we discussed yesterday. But look at what is happening now. The top 10 valuable companies, and that's what we're really discussing. Today, we're counting on some of the top 10 valuable companies on the floor of the NGX. Number one on our list is Dangote Cement. Dangote Cement is worth nothing less than 9 trillion Naira. 9 trillion Naira, and is 16% of market capitalization. 16% of the entire market capitalization. That's Dangote Cement alone, 9.07 trillion Naira. The next on our list is Airtel Africa. It's 8.27 trillion Naira. It's 15% of market capitalization. We're seeing Boa Foods also, 7.11 trillion Naira. That's 13% of the entire market capitalization. Then MTN Nigeria, 4 trillion Naira, 7% of entire market capitalization. Boa Cement is also 3.72 trillion naira, and that's 7% of the market capitalization. Look at Geregu Power. Geregu Power is sitting comfortably at the 2.88 trillion naira, and that's like one of the first power companies to be this massive. It's 5% of market capitalization. Seplat Energy, it's one of the energy companies to be listed amongst the top most capitalized asset on the NGX. It has a whopping sum of 4% of market capitalization. Seplat Energy, 2.4 trillion naira. They've been doing amazing numbers, as a matter of fact. I'm sure you've been keeping yourself abreast with what Johanna has been telling you regarding market. Transcorp is also 2.2 trillion naira. That's 4% of market capitalization. And then Guaranteed Trust Holding Company is 1.4 trillion naira, 2.5 of market capitalization. That's the first company we're seeing amongst the first 10 most capitalized assets from the banking sector. Zenith is also second, 1.1 trillion naira. It's 2% of market capitalization. Let's take a look at market performances as regards some of these companies. Nigeria's equities market gained 33.66 billion naira in the third quarter of 2024 with a September surge of 1.16 trillion naira. However, it's previously lost 1 trillion naira and 36 billion naira in July and August. Let's have a few sector breakdown. Industrial goods. We're seeing under industrial goods, we have Dangote Cement, ICT, we have Airtel Africa. Services, we're seeing Transcorp Power, Geregu Power also amongst the services sector. Banking, remember I talked about that, Guaranteed Trust Holding Company and Zenith Bank. Consumer foods, we only have one company from consumer foods amongst the top 10 most capitalized companies on the NGX, which is Boa Foods. Oil and gas, Seplat Energy is one of those representing the oil and gas sector. Let's see what's going to happen in 2025, because there are lots of conversations and speculations around Dangote Refinery going to be listed on the floor of the NGX the first quarter or second quarter of 2025. Definitely the market is waiting for soft, massive whale to come in and perhaps dine with its fellow trillion naira market capitalized companies on the floor of the NGX. Dangote Cement retained its top spot despite 19% stock price decline, and Airtel Africa overtook MTN, driven by a 5% stock price appreciation. Boa Foods remains the only consumer goods company in the top 10 market capitalization. The top 10 market companies account for approximately 75% of Nigeria's total market capitalization. So all those 10 companies they represent 75% of the total market capitalization, which is 42 trillion naira. They all have cumulative sum of 42 trillion naira. And remember that the market capitalization for the all share index of the NGX is a whopping 56 trillion naira. As of today, it's 56. So the entire market value is slightly decreased from 56 trillion naira in July to 56.3 trillion naira in September. And that's all for today on Key Metrics.
I mean, definitely you dealt with the heavy hitters today on the show. And look forward to seeing what Q3 results does to some of, their market capitalizations and their share price. Geregu has released their Q3, so we're looking forward to that.
Dangote Refineries.
Yeah. Oh, okay, it's still quite a while away, right?
6 months.
Okay, fair enough. But yeah, it's been an interesting conversation here on the show Market Pulse. Our time is up, but we'll do this again tomorrow, perhaps even feasting on Q3 results from Geregu Power on Key Metrics. We do this every weekday, every market day, 4 p.m. West African time. Thank you for joining us. See you tomorrow.